many of you love Tesla? How many of you have Tesla in your account? Tell me if you have it in your account. Write that. Yeah, very good. So let's look at Tesla. And so the underlying concept here is I would like to benefit as long as it's keep going up, but I would like to get out before the trouble hits. Are you with me? I would like to benefit as long as it keeps going up, but I would like to be out of the trouble before it really hits my portfolio. With that thinking and with that disciplined approach, we will just go through a Tesla as an example. So if you notice, I have Tesla here. Don't worry about these trend lines. I'm just going to remove that and make it simple for you. Just simple for you. So now, let's say if you are following Tesla in 1 year and you said that I will follow 50-day moving average on Tesla because it tends to go up nicely, it drops back, and or you could also figure out maybe 21-day moving average to enter into the position and to get out of the position. But let's say we are here on Thinkorswim, Tesla. You will notice that it nicely touches 50-day moving average. Blue line is a 50-day moving average. It touches a few times here, one time here. Then another time it comes quite close. Then another time, then another time, then another time, and then another time, and then another time. So you can see that I have marked certain spots, certain rectangles on my chart, which shows you exactly, Tesla at 50-day moving averages. And the green line is 21. So if you decide that you will use 50-day moving average as something, as an indicator to follow to get out of the position. So for example, you will go all the way from 1st May from $136 to all the way up to here, which is October, 21st October, which is around $417. And as it drops below 50-day moving average around 420, you will kind of get out of your position. So you will run, your stock or your position will benefit with a tremendous run that Tesla experienced between, say, May of last year until October of last year. And then of course you will be stopped out. Then now looking back into the past, you will say, oh Manoj, actually the stock also went up to 900. Yeah, it did. Then you may choose some re-entry points. So you guarded yourself, you protected your capital at that point, but then based on whatever system you were following, maybe like trend lines. So let's say if I just take an example of trend line, you decide that I will actually get back in again when it crosses a trend line. So you get back in here. So I will remove that here. So if you get in here, then you say, okay, I will continue to follow my 50-day moving average. So when you get in around 430 again in the position, you write this massive bull run that took place up to 900. Now you wouldn't know exactly whether 900 is the ultimate top or whether 900 after 900 will suddenly pull back. Well, if you're following Telegram, then you would know it. I did share that, okay, 884, 880 plus minus is the level where Tesla will probably just, kind of pause. And it's been almost 4 months. It has not been able to cross that. So we are here now. And let's say if you choose 50-day moving average, then around 19th of February, you will be out, which is $800. So you actually benefited from the stock running from $400 to almost $800, and then you get out of the position. And when you get out of the position, you avoid this massive pullback that took place, right? Then again, you may decide, hey, should I go into the position again or not? Then probably if you know my W and M patterns that I shared in other trainings previously, then you will probably decide to get in around $700 again. So you get $700, then it goes up to about 770, and you're not happy with 10%. Well, of course, if you're trading Tesla, you're not happy with just 10%. Then it comes back, it pull back and goes up, and then it starts to just go down. And actually yesterday it closed below 50-day moving average. Now we don't know whether it's going to go and drop further, but if you were there, you probably lost around $10 to $20 in this time, but it will keep you away. So you see, if you were in Tesla and if you were following some sort of stop loss mechanism that I just told you, very simple ones, you will ride from 130, 140 all the way up to 420. then you will be out around 420. You will probably get back again around 430, and you will have that massive run that goes from 430 all the way up to, you know, around 800. You will never be able to find out where is the top and where is the bottom. Okay, it's very, very difficult. I might have just been lucky when I shared that Tesla was around 884, where it will find you know, whatever that level is, they will find some sort of short-term top. But it's extremely hard to figure out where is the bottom and where is the top. So we will not be able to benefit from it, but we will still be out around 800 bucks. And that's like, you know, doubling your shares and confidently being in that position, allocating the risk properly.